Frontline was a shipping company, and this company basically um, focused on transporting crude oil. So they had something known as VLCCs, very large crude carriers that they owned. And the global fleet at the time I invested, I haven't looked at the shipping business lately, but this was an investment I made, I think, in around 2002. There were about 400 VLCCs in the world, and Frontline was the largest amongst all of them. They had about 70 of them in their fleet. 70 out of 400 were owned by Frontline. And this is the ultimate high uncertainty business. The VLCCs are chartered two different ways. Either they are time charters or they are daily charters. The entire Frontline fleet of 70 ships was on daily charters. And the daily charter rate for these ships can vary from $5,000 a day to $300,000 a day. It is a huge variance. And at that time, I don't know what the economics are now, but in 2002, once the rates went below 12 or 13,000, they were not making any money. They were losing money. And once the rates went over 30 or 40,000, they were just super normal profits, exponential profits. But the exponential profits, you didn't know what would happen the next day, because every day these prices fluctuate. But there's a particular nuance in the shipping business that I understood. And I understood this because a friend of mine in the real estate business had explained this to me. He said that, when you build these large office towers, it takes, in the US, in China it's probably much faster, but in the US it takes 3 to 5 years to get the permits and actually build these 20, 30, 40-story buildings. And so what happens is that when office space is very tight and fully occupied, all the real estate developers rush out to build new buildings. And they all rush out to build new buildings at the same time. And the banks finance all of them at the same time because everything looks great. It's a boom business. They can see 100% occupancy. And then 5 years later, all these buildings come on the market at the same time. And what happens is the occupancy and the rents collapse at the same time. So in these kind of high-end office buildings, you have this boom and bust cycle of very high occupancy and then low occupancy, then high occupancy and low occupancy. Just keeps going back and forth because the property developers just think whatever's happening right now is the way it's going to be forever. And the people who are in the shipping business are even worse than the property developers. They believe everything that's happening right now is the way it's going to be forever. So what happens is that when these VLCCs are trading at 200,000, 250,000 a day, they all go to the Korean shipyards and place a huge number of orders for ships. Okay, and they say, build me the ships. Same like the building, it takes 3 years or 4 years or 2 years to build the ship. By the time the ships are built, all these ships get delivered at the same time, those rates collapse. And then they go scrambling again and they got a bunch of bankruptcy. So the business goes through these ups and downs. Now, one of the things that happens is that when rates go to 5,000 a day or 10,000 a day, scrapping of ships increases a lot because they're losing money. And what they do, they take the old ships and just scrap them. So they make some money. So the size of the fleet goes down at the time when the rates are low. And as the fleet size goes down, it sets up the conditions for rates to go up. And then when the capacity goes down, the rates start going up, you cannot bring in more capacity because it takes 3 years to build a ship. So the only thing that can happen is price goes exponential. So anyway, I bought Frontline at a point when these prices were at 5 or 10,000 a day, and the stock had collapsed, and it was trading at something like I think at about $6 a share. And just like with Tesoro, a few weeks after I bought it, it was trading at $4 a share. Lost 1/3. Not as bad as Tesoro, but 1/3 is gone. And then it went from $6 to $9 in a short time. I wanted to just capture that spread. It was above the liquidation value of the company. I sold the company. Anyway, because of the very high uncertainty in rates, this company, if I had held the stock throughout, even with all the recent collapse in shipping, it would have been a 40 times investment from 4 to 160. I'm sorry, not 40. It'd be from 6 to 160, about 35 times my money. The ship owners will never learn. The property developers will never learn. Humans and our genetic makeup isn't going to change in 5 years or 10 years or 50 years. So we vacillate between fear and greed. And as long as there are humans driving action in industries like shipping, you're going to see that vacillation. In fact, there's a really good book. It's in fact a work of fiction. It's called The Shipping Man. I forget the name of the author, but I think if you Google it, you can find it. So The Shipping Man is the guy was an investment banker in the shipping business who wrote that book. It's a really funny book because it talks about the Greeks, it talks about the Norwegians, it talks about all this kind of cast of characters, the Americans in this business. It's funny as hell, and it really teaches you the business while entertaining you. And that author has written a book to read. And in fact, Frontline, one of the companies I invested in, is run by a guy named John Fredrickson, a Norwegian guy. And he has a character in the book who I think is a clone of Fredrickson, which is why I found the book kind of funny. The shipping business, I haven't looked at the shipping business in a lot of detail lately, but it's a challenged business right now. And what that means is there's probably opportunity in that business.